Today is February 6, 2019. This is going to cover Amazon and Netflix trade. I get a lot of requests to record my trades, and usually I'm so busy in the morning that I forget. And as you can see, I did forget to start the recorder for my entries here on Amazon, but I decided to go ahead and just record what I've got so those who are interested can follow along. When you look on the charts, you see I have a 60-minute chart on the left, 3-minute chart, 1-minute chart on the right. Usually it's a 3-minute chart. Below it I have SPY on 3 minutes, and adjacent to that I have a time and sales and level 2 up. The entire trade lasts around 40 minutes. At various times I'm going to go ahead and speed up the tape so that people don't get bored. Let's take a quick look at these entries. I noticed that the price was breaking out of a range. You can see that there was a range preceding my first entry. I shorted 2 lots as price started to display weakness. I went ahead and added. This was a little premature, my first add. I should have held off a little bit longer. It looked to me at the time that it was going to continue, but it didn't. It had a little pullback, and then once I realized that, I went ahead and added 2 more positions for a total of 5 lots. My intention had been to scale into price action as it showed weakness, and then again as it started to either 1, consolidate, and 2, pull back, and then continue its downward momentum. I usually don't have all the information that I have on this chart right now. It's there for you, the viewer. The MACD, it's a great tool if you're new to trading. It can kind of help you keep track of the momentum of the trade. Also, the blue line is the prior close and the yellow line is the prior open. The green line on price is a 5 EMA. Once I'm in a trade and it starts to move in my favor, I usually split my stops in 2. It allows me to manage the trade in 2 ways. One half would be aggressive and the other half would be more patient. One allows me to lock in some gains, the other allows me to try to catch the trend and ride the trend as long as possible. So far, price action is letting go pretty well. It's moving to the downside in sync with the market. I'm in some other trades as well this morning. Here is NVIDIA. It was moving against the general market, showing relative strength. I did a little scalp trade on the 1-minute chart with this. There's my entry, and there's my exit. So it was a profitable long. So far, Amazon's a profitable short. If you notice the price action, it's pretty parabolic. It's moving down very aggressively at a very steep angle. This is the point where a lot of people would most likely choke the trade. But from my perspective, if I have a trade that's working for me, it's moving in my favor, I want to give it every opportunity I possibly can to keep going. I don't want to choke the trade. I don't want to cut profits off short. Also, I know that it's normal and natural for stocks to have pullbacks as they travel through their trend. So I'm going to be patient. One little green candle isn't going to make me exit my entire short. Also, because I have a larger position size, 5 lots instead of 1, I'm going to manage this a little bit differently. I am going to try to exit where I can into strength or areas that I think it might be stalling. This wouldn't be one of them because it's early in the trend, and so far this price action is also fairly in sync with the general market, which is pulling back right now. If you're watching, you might stop and think, would you panic out of this trade? Would you adjust your stops too aggressively? You can see I haven't moved my stops yet. I'm being very patient. I've got a profit. I don't need to ratchet my stops way down on price action. I'll adjust them a little bit at a time incrementally. So whenever price gets far away from where my current stop is, and you can see I just adjusted it now, I don't get right up on price. I can usually go about half the distance. I want to keep it measured. I want to keep it incremental. I want to be thoughtful. I'm also not just a passive viewer of price action. I'm thinking and I'm looking, I'm checking the 60-minute chart, asking myself, where might this trade encounter some support? Where might this trade encounter some resistance? I'll look at that 60-minute chart and I'll look and see where potential areas of horizontal consolidation or prior price congestion areas are. And then as price approaches it, I watch price action for strength and weakness. I'm always asking myself, where might price retest? Right now, price is consolidating. It's moving laterally, which is one of the things that I like. If you have to have a pullback, a lateral pullback is by far better than one that retraces a significant amount of prior price action. Here's another spot that a lot of traders would choke the trade or panic out. You'll see it time and time again. Whenever there's a lateral move after a stock is trending up or down, people will choke the trade, and there's really no need to do that. You need to be patient. You need to watch price action, be thinking thoughtfully, evaluating what you see, paying attention to the trends. So price is moving sideways. I'm being pretty patient with my stops because the stock is moving in sync with the market as the market pulls back. And eventually, most of the time, that patience will pay off. Of course, you have to put it in context. This is the beginning of the run. It's not late in the run. It hasn't been trending down all day for 3 hours or 2 hours. And as it starts to break into the new lows, I just adjust my stop. I find a lot of times prior consolidation area is a good place to put it. But when I'm moving my stops around, I don't want to put it in a place that is terribly obvious, where I think market makers are going to try and ding a stop. I'm trying to put it at a place that makes sense, that's well defined, that's falsifiable, that if price comes back up to it, I can say, yes, the trend might be changing, or I'm wrong about direction, or I'm wrong about timing. So I'm trying to watch signs of strength and weakness in price action. I'm trying to pay attention to the trend. I'm looking for follow through always. What kind of follow through do I have? Is it strong? Is it weak? Does it seem extreme or excessive? As I watch price action right now, I can see that there is a small, what I call a micro gap down between the two most recent candles that have closed. You had the breakout of the consolidation and then followed by a little gap down. I usually pay attention to those. If it happens early in the run, that can be a good thing. But after price has moved a substantial amount, and people say, well, what's substantial? You can look at the ATR, the average true range of a stock. But after I see a gap down after a pretty decent run, and this is about 30 points, 25 or 30 points, it could mean that it's getting a little overheated, especially as you can see it's being followed by a doji. I'm not seeing a strong follow through on that. So I'm going to be extra attentive. I might tighten up my stop. I might take some partial profits. We've already had a really good move. There's nothing wrong with locking in some gains. It's not about panicking out. It's about assessing price action and taking a little bit of risk off the table in a logical and incremental way. So I'm watching this price action. It's not very inspiring. The tempo is slowed down. I'm seeing small candles. I'm not seeing strong, robust follow through to the downside. So let's take a look at Netflix, which I'm also trading. 2 entries, 2.5 lots each. It's moving similar to Amazon, not exactly, but a little bit. And I'm going to go ahead and adjust my stops on that. It's important when you're in a lot of trades to stay focused, go through each trade that you have that's open and constantly double check your stops and adjust everything incrementally. While you're trading, it's also very important to be aware of the bigger picture. See what the general market's doing. You can see right now that Amazon is still in sync with SPY. They're both falling. But you know, you also need to check that 60-minute chart. Where might it retest? Where might support kick in? Where might it bounce? Don't forget to check your time and sales. Are you seeing a lot of selling roll through? Or is it starting to slow down and stagnate? Are you seeing some buying come in? How about the level 2? Are you starting to see the depth on the sell side increase or decrease? Just be aware of what's happening. Don't get trapped in just your one little piece of the trade. Also consider, where might that trade go? Just don't be a passive participant. Think, plan, anticipate. As I look at the price action on Amazon, I'm thinking, is it possible we have a measured move here, or might have a measured move? In general, I'm not liking the price action that I'm seeing. It's not as strong as it was at the open. It seems to be slowing down. The candle sizes are getting smaller. They're more doji-esque. We're starting to see the lower shadows or the tails on price action. It's starting to move closer and closer towards that initial trend line that we had for the morning. So I'm going to go ahead and I'm going to bring my stop down a little bit, anticipating that if price does close above the trend line, I might want to take a little bit off. I'm not panicking and selling everything. It's all part of my plan. My plan is to try to take a little bit of risk off the table as the stock moves in my favor. We've had a pretty good run. I'm not just going to count my entry. I'm going to count from the moment it started going down, which was around 1670, down below 1640. So that's 30 points. That's pretty decent. And I'm starting to see price show a little strength, some retracement of those dojis, and attempting to cross over the trend line. If my stop gets hit, it gets hit. That's okay. I might even bring it down a little bit more. You'll notice that sometimes I move my stop around a little bit. It's because I can't quite see the price action. There are times when I'll move it up or down depending on whether it's a long or short trade. Alright, we got dinged out. I'm okay with that. I didn't see a lot of follow through after the breakout. A lot of weak, indecisive dojis. I see a trend line break. I see some higher closes. If I look at the MACD, it's starting to slow down. Looks like a crossover might be coming fairly soon. So I don't usually use MACD as a trading trigger, but it does provide some additional confirmation, and I'm okay. I still have 2.5 lots. I still have plenty of shares that if this thing turns down and keeps going, I can participate. In a lot of ways, the way I think about larger position size is anything over one lot in many ways is just a bonus position. That doesn't mean you can be nonchalant about managing the risk that's associated with it. It's actually quite the opposite. You need to be much more focused and much more aware that a strong adverse move could either gobble up your profits or result in a large loss. So you have to be attentive. You have to strive for flawless precision and strive to master your trading methodology. There's Netflix. I adjusted that. You can see. In fact, while I'm talking to you, I'm making the rounds visually. I go from stock to stock to stock that I'm in, and I look and I see how far it's gone. I quickly evaluate price action, and I determine whether or not I need to make an incremental stop adjustment. So it looks like the price action on this might be heading back down. We'll see. It could also be a double bottom. I'm going to go ahead and adjust my trend line with the assumption that it's going to make a new low. Doesn't mean it will. But if it does, I'm going to participate in the move as long as I possibly can. Try not to choke the bulk of the trade. My goal in every trade I make is first to get in a trending stock or potentially trending stock, and then to capture at least anywhere from 70 to 90% of the move. If I can do that, then I've caught the bulk of the trend, and I usually feel pretty positive about that trade. Always remembering on a regular basis to look at the bigger picture. Where might support and resistance kick in? What is the market doing? It looks like it's having a little bounce. It's been heading down, but perhaps it might be leveling out a little bit. Always want to keep an eye on your bigger picture tools, the 60-minute time frame, the general market, time and sales, level 2. Granted, they can play a lot of games on level 2, but if you use time and sales to confirm what you're seeing, you should be okay. And of course, the primary focus should always be price and trend structure. What is happening on the chart? Not letting strong emotions or what you want and hope will happen obscure or blind you to the facts on the chart. So I'm going to go ahead and speed up the tape a little bit here, since price action is kind of boring. Showing you Netflix again and what I'm watching, how I'm adjusting my stops, what the price action's doing. You can see I still have my split stops. I was not dinged out of this trade. Still a lot of distance between the two slopes in the MACD. Price action's going down, the market's going down. We're at that point now where Amazon is moving into new lows. Will it be a shakeout and a double bottom and then bounce up? We don't know, but I'm thinking about it. I'm not just sitting by like I'm watching television. I'm contemplating, what am I seeing? What could develop? What would I expect to see if the downtrend continues in a strong fashion? What would I expect to see if the trend is going to reverse? Right now, Amazon is trying to move into new lows. Price action seems a little tentative to me. Adjusting my stops quickly on Netflix. Right now, I'm not seeing a lot of positives here for price action. I just quickly adjusted my trend line, noticing that on SPY the slope of the price action seems to be moving up a little bit. It's also on a higher time frame retesting yesterday's low. That's SPY retesting yesterday's low, and seems to be bouncing and moving up off of that. So I'm starting to adjust my stops a little more aggressively on all my trades, Amazon, Netflix, and the other trades that I'm in, and change my little arrow to show that SPY is moving up. Also, I look at the 60-minute and I see that the price action on Amazon has pulled into an area that was acting as support just 2 days ago on February 4th. So I have adjusted my stop. I have tightened it up a little bit. Basically, Amazon is in a range right now. Was trending down and now is ranging sideways. Let's take a look at SPY on a higher time frame chart. This is the 10-minute chart, and you can see it's pulled back to an area that it's retested multiple times, successfully found support, and appears to be moving up off of that level, off of yesterday's low. That's one thing a lot of day traders fail to pay attention to, is what the general market's doing. 75% of all stocks follow the general market. If the NASDAQ or the S&P 500 or the Russell is moving up or down aggressively, a large number of stocks are too. So it looks like price is at a turning point here. It's broken our trend line and it just dinged our stop out. Just because the trade's over doesn't mean I'm done with this ticker. I like to watch and see what the price action does after I exit. Was my timing right? Did I jump the gun? Did I miss any signs? I like to do immediate post-analysis in terms of how I manage the trade. And can I learn anything from it? Did I follow my rules? Did I follow my plan? Did I follow my triggers? Here's Netflix. Looks like I'm getting ready to get dinged out of the final half on that trade, which is fine. It's a profitable trade. I followed my rules. I followed my plan. And there it goes. Knocked out for the final half. And even though it didn't go a lot, the larger position size made it a very lucrative trade. I'm going to keep an eye on the stocks. I'm going to look for small risk, well-defined re-entry areas to either get on board a long trend or a continuation down. But I'm not going to just jump into anything. I'm usually looking to trade trends, and once I've captured a couple of good trends, then I shift to profit protection mode. I'm not really that interested in ranges. I'm interested in the easy money. I'm interested in the dollars, and that's trend. I'm not interested in the pennies and the hard money, which is range. Unless it's a wide and tradable range, I'm going to stay out of it. If I do decide to trade it, obviously I'm going to get long at the lower end of the extremes and short at the upper end of the extremes, unless there's some kind of a significant breakout. Okay, I'm going to speed up the tape here so we can see how price behaved after I exited the trade. Something you might consider if you're struggling: record your own trades. If you have difficulty with a certain pattern, opening wedges or triangles, or identifying head and shoulder patterns, or reading price action and price weakness at certain critical turning points, record those trades. Go back later and look at them, watch them, evaluate them carefully. Was there any technical information that you ignored, fought, or forgot? Were there any clues that you overlooked? Were you experiencing some strong emotions at certain times throughout the trade? The more you can identify and the more experience you can put under your belt, the better off you'll be. Any opportunity you have to do what I call thoughtful practice, kind of a combination of post-analysis and reflecting on your trade, trying to find insights, looking at your trade from different perspectives, working on your weaknesses, contemplating how you can take advantage of your strengths, being aware of any edges that you can exploit, where you failed to follow your rules, your plan, your triggers, identifying why you failed to execute a trade that's set up. The more awareness you can bring to your trading, the better off you're going to be. Until next time, good fills, everyone.